let's move on to the jobs report because no one's talking about it, but we're going to talk about it because it is very important. It was, positive news. I mean, we had 228,000 jobs in the month of March. That was well above the estimate of 140,000 jobs. And February, 117,000. What I like that was even revised down 34,000. So it wasn't many jobs in February. January was revised down, 14,000. We've got a strong job market. And that's why when I hear these economists like, the trade, the tariffs is going to cause a recession. I'm pretty confident, maybe somebody can correct me if I'm wrong, but I do not believe we've ever had a recession with full employment like we have right now. It is just not possible. Right now, people are a little bit scared because, again, it's in the headlines. When that slows down and it's like, okay, it's boring, people can say, you know what? And you went to the baseball game. And what happened?
Yeah, we went to the game Monday night, and I was just blown away. It was packed. I mean, even the upper deck or the upper stands, whatever they're called, it was filled with people. And I was like, Monday?
And it wasn't even, what were the teams? It wasn't even like
it was the Cleveland Guardians, yeah. So it was not like I think they travel well. Right. It was awesome to see the support for San Diego, but, it was like, wow. If things are slow in the economy and you're worried about tariffs, you're not going to a baseball game on a Monday night.
Aren't tickets still like $10, $12 for a ticket?
Oh, sure. It'd be nice. But the other thing, too, when we look at this jobs report, you talk about the jobs that were created, the unemployment rate, that did tick higher to 4.2% from last month's reading of 4.1%, but that was largely due to an increase in the labor force participation rate. That's a good thing. It means more people are optimistic about the job market, thinking they can get a job, so they're looking again. To have an unemployment rate around 4.2%, as you said, that's a very low rate at the end of the day.
And the other positive in this job report was wage inflation. Wage inflation was 3.8%, down from last month's 4%. This is another thing, because if wages are going up so much, people will spend more money. That'll push the price of goods up. But again, 3.8% is a nice number to have. It's not inflationary, but it makes people feel good because their wages are going up. So I like seeing that number as well.
And I know we did hear from Fed Chair Powell on Friday as well, saying, the tariffs are going to cause inflation. And I think he did kind of classify it as short-term inflation, not long-term inflation.
He didn't use a transitory word again, did he?
Yeah. I know that maybe not him, but other Fed members have. But I think it would be. I am still very optimistic about these tariffs not causing a huge problem long-term. I think it is more for a negotiating tool. And President Trump is not going to come out and say it's a negotiating tool and it's a short-term thing, because then you lose the negotiating power.
You lose your power, yeah.
So I think you're going to continue to hear these negatives, but I really think 3 to 6 months from now, inflation is going to be in a better spot. I think the trade is going to be in a better spot, but it's going to take a little bit of time to get there. The other concern people are having, obviously, is these federal government layoffs. I will say I was surprised to see this in the payroll report. Just 4,000 jobs were essentially lost from the federal government in the month of March, but yet a report from that Challenger Gray and Christmas indicated Doge-related layoffs have totaled more than 275,000. The thing I found interesting here is the BLS noted that workers on severance or paid leave are still counted as employed. So you might not see a huge uptick in the federal government job losses until, September, October, when that kind of paid leave severance expires.
Yeah, I was going to say 6 months, so it's going to be a while before you see that. And the big question, too, this gives those government employees a chance to find a job somewhere else. And I think the economy, we can talk about the JOLTS report, because that's where these government workers can actually find a job, because we move on to the JOLTS report. Month of February, 7.57 million jobs were open, just under the estimate, 7.6 million, only down about 194,000 from January's reading, but still, that is 1.07 jobs for every available worker. So it's like, if you're not getting a job, you may not want a job. And I think some of those government workers, they may slide into retirement, because they could be close to retirement. What are you laughing about?
It made me think, my wife and I were watching this movie called You, Me, and Dupree the other night, as with Owen Wilson.
Yeah, I think I saw that.
And he's kind of, a little lazy, doesn't want to work. And in the beginning, he goes to a job interview, and he's like, well, do you get Columbus Day off? No, you don't get Columbus Day off. Well, thanks for the interview. And he gets up and he's technically looking for a job. Right? And he would be marked as unemployed because he went and looked.
Yeah, and we've talked about how loose that unemployment rate is established because, like, and now I think I think it's so loose now. Well, I talked to my cousin about a job, so therefore I'm looking. I mean, it's so loose, and that movie was what, years ago, I think. Wasn't
Yeah,
it?
I forget when it was, but it was probably at least 10 years ago now.
Yeah.
So it was kind of a right in tune with what we're looking at today. But the thing that I think people forget is, how a real labor market and how a real economy looks. We've been spoiled, the last 10 years with, stock appreciation, with a labor market that's been really, really strong. And yeah, I say the last 10 years, I mean, gosh, even the last couple of years, it's just been crazy, the numbers that kind of COVID distortion created. But I mean, you go back to 2019, which again, a very, very healthy labor market. Job openings actually averaged approximately 7.15 million for the year. So again, the number we saw was 7.57 million,
Which is higher.
which is higher than what we saw in 2019 on average. And actually, ironically, 7.57 million was the high watermark in 2019. And then the weakest number came in December that year when job openings came in at 6.4 million. And I'll tell you, that was before COVID hit. So people still thought that was great. People still thought the economy was moving along great. People thought the labor market was great. So again, people are now comparing back to like 12 million we saw in 2022. That is not reality. That is a very strange number that, I don't think we'll see again, frankly. And I mean, we'd have to have huge population growth, I should say, to see that number again.
Yeah, and again, people get distracted by looking at the headline news. You got to read below the headlines of what's really going on, because I do believe at the last quarter of the year we could have a boom quarter in GDP, because a lot of this will be resolved and people be looking for a job. It's and they're out there. They're out there. So
yeah, and I think just kind of sum up this situation is, yes, it sucks. The volatility is no fun to go through. But look at where your portfolio will be 2 to 3 years from now, not 2 to 3 months, because I think 2 to 3 months from now, you're still going to see that volatility, but you are not going to be able to time that bottom in this market.